Isha from YHATAW Real Estate, and today in this video we will discuss taxes levied while buying a property. Are you aware of the legal aspects of investing in a property? Taxes constitute a significant share of the total cost of buying property in India. Largely, there are 5 types of taxes imposed while buying a property. Number 1, stamp duty. Number 2, registration tax. Number 3, value added tax. Number 4, service tax and GST. Let's understand these charges in details. Number 1, GST, goods and service tax. The GST rate on residential properties is 1% for affordable housing and 5% for other than affordable housing projects. GST has to be paid in case of an under construction property. Once the residential complex is fully constructed and occupancy certificate is obtained by the developer, no GST is charged. It should be noted that stamp duty and registration charges are imposed in addition to GST on the purchase of under construction units, as these are state levies. Number 2, stamp duty. Stamp duty is levied on the sale agreement to make it legally binding for the parties involved in the property transaction, that is, buyer and the seller. It is calculated on the circle rate set by the government. Stamp duty is paid at the time the property is transferred. The stamp duty charges vary across states. Some states like Delhi, Haryana and Rajasthan provide discount on the stamp duty if the buyer is a woman. The actual amount may vary between 3% to 7% depending on the local rules. The stamp duty charge may vary depending on the factors like transaction of the old property, location of the property, type of properties, that is residential or commercial, and whether the buyer is a male, female or a partnership of both. Number 3, registration tax. Registration process includes recording the sale documents with a registering officer. During the registration process, the buyer and the seller have to appear at the registrar's office along with the documents like ID proof and a copy of stamp duty payment. The documents need to be registered under the Registration Act 1908 within 4 months from the date of execution after the stamp duty is paid. The document is the final agreement that is signed between the two parties, after which the buyer becomes the rightful owner of the property. Typically, the registration fees is 1% of the agreement value, but it can vary from state to state. The local government decides the registration percentage of a property. Number 4, VAT, that is value added tax. VAT is levied from transfer of rights from the developer to the buyer in the form of a sale agreement. Like stamp duty and registration tax, VAT is also dependent on local rules and regulations. VAT varies from state to state. Some states charge VAT on the composite value of the under construction property, whereas others charge based on the cost of material used for construction. VAT is given to the seller and it is his responsibility to deposit it with the government. VAT is only payable when you buy an under construction property, not while buying a completed project. Number 5, service tax. Service tax is levied by the central government on the transaction of an under construction property. Service tax is charged on the basic cost of the property. It is levied on 25% of the total value of the property, while 75% is considered on the value of the land on which the property is built. It means the service tax payable would be 15% of the value, that is 25% of the 15, which is 3.75% of the total value of the property. The buyer has to deposit the service tax to the developer, whose responsibility is to deposit the same with the government. So, these are the 5 taxes which you should know before buying the property. Hope all these details are useful for you. And before you leave, do like, share and subscribe our channel. Thank you. Isha from YHATAW Real Estate.